क्या ये कभी हुआ है कि आपके छोटे भाई ने कुछ किया हो और उसकी सजा आपको मिली हो? क्या ये भी हुआ है कि आपके छोटे भाई ने कुछ नहीं करा हो और उसकी सजा भी आपको ही मिली हो?
जी हाँ।
फॉर एग्जाम्पल, मान लो आपके भाई ने एक प्लेट तोड़ दी और आपकी मम्मी आपको बोलती है कि वो तो प्लेट तोड़ेगा ही, तुम सतर्क क्यों नहीं थे? तो क्या आपको लगता है आपको ये डांट पड़नी चाहिए थी?
बिल्कुल
क्या
नहीं।
ये सजा आपको मिलनी चाहिए थी? नहीं। तो बस इसी इश्यू को आज हम डिस्कस करने वाले हैं। Namaskar to all the dignitaries on the dais, off the dais, the members of the jury, and all my friends here. I am Akshat Goyal from Jaipur, and I will be presenting my paper on the topic Legality of ITC Denial to Recipient on Fault of Supplier. So, before we dive into the topic, I would first like to briefly discuss the flow of ITC, how ITC flows. So, for example, Mr. A is the supplier. He sells goods to the recipient for let's say rupees 100 and collects GST of rupees 18. The supplier deposits this 18 rupees tax with the government. Now the recipient sells the goods ahead for rupees 200 and collects tax of rupees 36. Now at the time of payment of tax, Mr. B, the recipient, would claim the credit of rupees 18 that has been deposited by Mr. A, the supplier, and would pay only a net amount of rupees 18. So as we can see, the department is allowing the credit of rupees 18 because the same has been already received by the department from the supplier. Now coming on to our case. Now here we have the supplier, Miss Anuradha. I hope you all know her. So Miss Anuradha supplies goods to Mr. Babu Rao for rupees 100 and collects GST of rupees 18. Mr. Babu Rao sells the goods ahead for rupees 200, collects GST of rupees 36. And as expected, Ms. Anuradha runs away without paying the tax to the government. Now the question is, how much tax will Babu Rao deposit with the government? If you think like the government would say that since I have not received the 18 rupees from the supplier, I will not allow the credit. I will require Mr. Babu Rao to pay a full rupees 36. However, if you think like Mr. Babu Rao would say, I have already paid the tax of rupees 18 to the supplier and I will not pay that again. It is not my fault that she has not deposited the tax with you, with the government. I would still claim the credit rupees 18. And he would say, I would pay only 18 rupees. This is the entire issue that we're dealing with in this presentation. Whether Mr. Babu Rao will get the credit of rupees 18 or not, when Ms. Anuradha has not deposited the tax. So, since the law is framed by the government and not by Mr. Babu Rao, the law reflects the position of the government. First of all, there is section 16, subsection 2, clause C, which says that no ITC shall be available to the recipient unless the tax has been paid to the government. Then, they introduced Rule 36 sub Rule 4, which says that the total ITC available to the recipient is restricted to 120% of the eligible ITC reflected in the invoices uploaded by the supplier. Later on, this limit was reduced from 120% to 110%, 105%, and now to only 100%. And latest we have, as ma'am also said, section 16.2 clause AA, which says that no ITC shall be available to the recipient unless the invoice has been uploaded by the supplier in his GSTR1 and reflected in the recipient's GSTR2A and 2B. So why did the government come with such harsh provisions in the first place? Now that is because the government was being defrauded. The recipients were colluding with the suppliers, and the suppliers were issuing fake invoices to the recipients. Fake invoices that is invoiced without any supply of goods. On the basis of such invoices, the recipients were claiming ITC, which ran into hundreds and thousands of crores, while at the same time the supplier was not depositing the tax. To prevent such frauds on the government introduced such stringent provisions. But the impact of these provisions was not restricted to such fraudulent supplier recipients. The impact also extended to the innocent participants who had to face the scathing nature of section 16.2c. Now when the proper officer restricted the credit, when he reversed the ITC already availed by the recipient, because merely either the supplier had not filed his return, he had not declared the invoice in his GSTR1, or he had not paid the tax. So now The first question which arises, are these provisions just and reasonable? Whether to do full justice to the recipient. So in that regard, the most important point is the doctrine of impossibility. The GST Act 2A and 2B is a read-only document. The recipient cannot make any changes in the same. So if any invoice is not appearing in GST Act 2A and 2B, that is the fault of the supplier and not the recipient. It is not possible for the recipient to force the supplier to file the return and pay the tax. It is a common legal maxim which says that law does not contemplate something which cannot be done. Now, when a law imposes a duty on a person which he cannot perform because it is out of his control, the law will normally excuse him. So in this case, the law should excuse the recipient because it is not possible for him to force the supplier to file the return. The other points in this regard include that action must be taken first against the supplier who has actually defaulted in paying the tax, and not against the recipient who has actually paid the tax to the supplier. Next is that the responsibility of collecting tax lies with the government and not with the recipient. Government cannot pass on this responsibility to the recipient and force him to force the supplier to pay the tax. And the next point is unjust enrichment. The government is having unjust enrichment as it is collecting the tax from the recipient, while at the same time still retaining the option to collect tax from the supplier as well. Since you all would agree that these provisions do not seem to be just and reasonable, but to strike them off, we need to prove that these provisions are unconstitutional, that they violate the Constitution of India. So first of all, we have Article 14 of the Constitution, right to equality. Article 14 says that all citizens must be treated equally. However, unequals cannot be treated equally. By extending the application of Section 16(2)(c) to all innocent purchasers as well, the department is treating the guilty purchasers who had actually colluded with the suppliers to claim fake ITC and the innocent purchasers equally, and that violates Article 14 of the Constitution. By passing the incentives of tax from the supplier to the recipient, the same is arbitrary, and arbitrariness is antithetical to. Next, we have Article 300A. It has been held by the Apex Court in various cases that ITC is the property, it is a vested right of the recipient, and denial of property is a violation of Article 300A of the Constitution. Although it has also been held by the Apex Court in other cases like the ALD Automotive Private Limited, that ITC is merely a concession extended by the state, and the conditions along with this concession must be complied with. And lastly, we have Article 19(1)(g). 19(1)(g) article says that every person has a right to practice any profession, carry on any business, occupation or trade. Denial of ITC severely affects the ability of any dealer to carry on his business. Dealers heavily depend upon their ITC to deposit their statutory GST dues. Now, since they have already paid the GST to the supplier, requiring them to pay the same again to the government is a severe hardship imposed upon them, and in violation of Article 19(1)(g). Because of these provisions, the recipient is like, मैं क्या करूँ फिर धंधा छोड़ दूँ? There is another landmark case law that I would like to quote. The Apex Court in the case of Commissioner of Trade and Taxes versus Arise India Limited. This case was rendered in the context of the Delhi VAT Act, the early tax regime before GST. Now, the case was in context Section 9 of the Delhi VAT Act, which is similar to the Section 16 currently we have GST Act. The Delhi High Court held that, which was confirmed by the Apex Court, that the law in the present form is unconstitutional in violation of Article 14 for reasons I mentioned just before. But instead of striking down that provision, the court chose to read down the provision and restrict its applicability. The court restricted the applicability and exempted the bona fide purchasers who had actually purchased the goods for value and actually received the goods from the provisions of that section, so that they should not be unfairly prejudiced. The court also held that action must first be taken against the supplier and not against the recipient. Now the next question arises, are these provisions retrospective? So for that, I would want to पहले chronology समझ लीजिए कौन से sections कब आए थे. So on 1st July 17, GST was first introduced along with Section 16(2)(c). On 9th October 2019, Rule 36(4) was introduced, prospectively and not retrospectively. On 1st January 2022, Section 16(2)(a) came into effect, that again prospectively. And 9th July we are standing here today. So between the first and second point, that is between 2017 and 2019, there was no legal provision that required the recipients to match the credit with the 2A and to avail credit only if the tax has been paid. In fact, there are various circulars issued by CBIC which make it clear that it was never the intention of government to restrict credit on the basis of 2A before 2019. The circular said that in case the supplier is not appearing in the GST or 2A, the officers can choose to require the physical invoices from the recipient and allow credit on the basis of that. Thus, it is clear that the provisions are not retrospective. And before 9 October 2019, there was no requirement of matching of IT. So, the next question is, what is the current state of litigation on this? So, in May 2019, the Delhi High Court admitted a writ petition on this issue in the case of Bharti Telemedia Limited, challenging the constitutional validity of Section 16(2). Since then, almost 36 writ petitions have been filed in various high courts across the country challenging similar provisions. But as on date, we have not received any judgment. All we have received is tariq pe tariq, but no justice. So, this is a very controversial issue, I would say. There has been no authoritative judgment in the GST law up till now, but there have been various judgments in the preceding, in the erstwhile tax regime, in the VAT, Sen VAT, Mod VAT, Central Excise, and many of them are in favor of the SSC, contending that the provisions are unconstitutional and not fair. I think the way forward from here is that the government should amend these provisions either before the judgments come from the various High Court, Supreme Court, or after those judgments come, restricting the applicability of these sections. Since these sections were brought in to remove fraud, we cannot entirely remove these sections at the cost of the other taxpayers. But we can restrict their applicability and exempt the bona fide taxpayers. The bona fide recipients who actually received the goods, who actually paid the consideration, paid the tax to the supplier, and the transactions were genuine. So concluding, I think that is the way forward, I believe. Thank you for being such a patient audience. This is Akshat from Jaipur.